There's no video set up. Mute yourself. Did you just come with all photos this morning?
Did I? Why do I not have? Can I see Anton? Let's see. Why can I hear him?
Hi, Cheryl.
Can you hear me, Anton?
I can hear you.
Hi.
She just wants to be able to be with us. She doesn't want to leave me.
Hey, John.
Hey, Anton. I have to say okay to the recording.
Can you see my screen, my market monitor?
Yeah.
Yes.
Okay.
Hi, guys.
Hola.
Hi, Sean.
I'm rising to the occasion since I had to miss last month also.
That's all good.
I'm glad it's being recorded.
It is. All right.
Where it goes, we don't know, but it's recorded.
Right. I can't
I've
tell you
watched the
where it ends
recordings
up.
before. I've watched the recordings before, so you can get them.
Okay,
All right.
cool.
All right, well, so I'm going to go through Market Monitor in a minute, but I thought I would, let me see if I can do this. All right, so it's back to me. So I'm walking you over to my calendar here.
Please.
No,
She's in there.
there.
Hold on 1 second. Sorry.
So, and I'm going to see if we can see this. Can everybody see the calendar?
Yes.
So if we look at what month are we in? We're in May, right? So here's May. Right, where were we at the beginning of May? We had about 1,164 for sale. Where are we at today? We have 1,749 for sale. Right? Is that a pretty significant change in a month?
Yes.
I would say so. So and again, I keep that calendar on my wall and we write every morning, you know, between 9 and 10, if somebody's here, they write up on the calendar what the count is, because, you know, that's the easiest way to kind of get a sense, because if you just look and you don't write it down and you can't look back, sometimes it's hard to tell where you've been. So, you know, just from a reference standpoint, having that calendar up on the wall gives us the ability to quickly say, kind of where are we at relative to where we've been here lately, even a year ago. I mean, I have my calendar from, since I only started this really last year, I have 2021, and I'm just walking over to look at it. So today's June 3rd. So June 3rd of last year, we had 1,370 for sale. And as of this morning, we were 1,749. So you can see that we have more for sale than even a year ago. So the trend is changing, and this is a good conversation to have with buyers and sellers. And, you know, as we go through this, I'll show you, you know, kind of what some of the scripts that you might want to consider using with either type of client. So, or potential listings, potential buyers, and any of the above. So let me go back to make sure my screen is being shared. All right, so median price. So this is pretty phenomenal. Look at, so April of 2022, we were, just to be easy, we're 400,000. Look where we are in May, 425. This is all of Charleston, remember? So all of Charleston, we went from 400 to 425. That's 6.25% in a month that it changed, right? And from a year ago, it's 22%. So, you know, I think we are, this is kind of, I think we're going to be experiencing this peak number. You know, this is a huge jump from a year ago. But this, I think we're experiencing this peak, because remember, that's, this 22% is May of 2021 compared to May of 22. So May of 21, we were right at, come on, we were at 348. So we went from 348 to 425 in a year for all of Charleston. So, you know, pretty phenomenal growth in the past year. If you look at, and again, as we go down, so if we look at price per square foot, you know, a little over 20%. So still pretty, you know, matching the sales price, it's jumping on the price per square foot. You know, the median percent of original price, we're still at 100. If you look at the average, you know, we're at 101. So, but you can tell the seasonality is returning to some degree, because look, you can see we lost seasonality in 2020 because of the shutdown for COVID. It was all out of whack. So 2020 kind of lost that hump of, you know, that you would see on traditional, but look at the last 2 years, you know, so here's the low in January, February, the high in June, goes back to the low in December, January, high probably in June, right? So we're experiencing this return to seasonality. And if you look at that, the June, remember June, these are closings. So remember the June closings, one of those contracts written, let's say kind of late April, maybe April, May, a few in June, but mostly kind of April, May type of contracts. So that April, May period, you're getting, the sellers are maximizing, on the percent of original list price. And the same thing is happening this year. But if you look in the winter, again, 99% is still pretty phenomenal. But in the winter, there were 2% more negotiable in the winter than at the peak of the market. And that is not atypical if we go back in time. So you can see, and again, look at there's 2015, 16, 17, 18, 19. You see, and let's not go back quite as far, go back 10 years, you can see the seasonality, right? And it changes by about, 1% to 2%. So sellers can hold on to their price a little bit easier in the spring, summer than they can in the fall and the winter. Now, when you look the last couple of years, definitely a more defined seasonal jump than 16 through 19. But I think we're peaking out here at 100, 101, and we'll go back down in this winter. It's going to go back down below 100. I mean, it has to. It's the trend is set, and sellers are going to have to become more negotiable. And remember, this is from original price, right? So look at all the price changes that are happening, and I've looked at some houses, and they're priced at 115, and they changed to 11 like in 2 days, and then they changed to 1050, and then all of a sudden they're 999. I mean, they're changing their price, some of these by 15%. Does that mean their house dropped 15% in value? No. It means they overpriced their house by 15%. Right? It's when you look at the comps are going to matter again. Right? And that's yay. Yeah, everybody say yay. That's good for all of us. Long term. So what's happening is, oh, my neighbor sold for 975. I'm going to go for 115. Right. And then reality is they're not getting any traffic. They're not getting any offers. So they start to drop the price, and they're still going to sell for 975. They just started way too high. So watch, this number is going to start to change, because again, this is an original list. So if somebody takes 10% off their house, that's going to start to weigh down this average and median. So the median, we've been stuck at 100% on the median for over a year. So the question is, when do we drop below? And, I can't really tell you, because there's thousands of closing each month. It's hard to see where that median line is, but at some point we're going to dip below that 100%. And again, we'll be able to probably see on the average, if the average starts to get back down to this level, because if we look at the median, like the median was 98, and again, very consistent, 2015, 16, 17, 18, 19, the start of 20, very consistent, in that 98% range, let's say. So if you look at the last moment we were kind of there was the beginning of, right when COVID started. So if we look at the average, we look at 2020, if we get back down, to get back down to this level, we probably need to drop this to maybe 97%. And then the median will start to go back down below 100 and return to what should be a normal level. It's like, buyer looks at a house, they look at it again next weekend, they negotiate, they make an offer, they ask for repairs, they have a home inspection, they get an appraisal done, they do a CO 100, all the normal stuff that we used to do. So at that point, we will return to that where there's more of an even playing field. Look at the days on market. So we're still sitting at 3. So 3 days on the market is the median days on market. So half the houses are selling in 3 days or less, half for 3 days or longer. But look at the average is still dropping. So we're down to 14. But keep in mind that 14 days on the market, this is for May. So those contracts are probably, we're looking at kind of mostly end of March, maybe April contracts, which we're kind of in the heat of the moment. So, we're still going down, but eventually this trend will start to go back up. But if you look at where we were, 50 days was not uncommon, right? I mean, a lot of us were in this business, back here, and that was normal. 3 is not normal, or 14 is not normal. The median was, in the 20 range. So back here, 20 to 30 days, if you weren't getting a contract, you might think, ooh, I'm probably overpriced. Now you're thinking after 3 days, if I'm not getting a contract, maybe I am overpriced. But we will return to this kind of, but you can also see this, the inverted seasonality here. Like in the winter, in the winter months trying to sell, it takes longer to sell than it does in the spring and summer. So you can see this, we will return to seasonality at some point on this curve as well. Months of supply, we're at 0.9. Let me zoom in a little bit. We're at 0.9, but look at the trend, right? February 0.7, 0.7, and then we were 0.8 in April and 0.9 in May. Which direction is it going? And we're going back up. And we're going back up, interestingly enough, in the spring, summer, right? So we're going higher. We hit lows really in January and February. And why is that? Well, that was because there was almost nothing for sale. We hit the low in inventory in March. So this is reflective of how low our inventory is. And as our inventory comes back up, this number will go higher. And we will return to, I zoom out, we're going to return to this 4 months of inventory being a normal, healthy market. So you can see this trend is headed higher here. Homes for sale. Let me zoom in a little bit here. So look at the homes for sale. Now, again, my calendar doesn't link up with what this is because it's the way that they keep the data. But we hit a low of 928 active on the morning of, what was that, March 15th. So March 15th, we're at 928. So we're at 1700, and I think I looked a minute ago, 1760s or so. So by next weekend, so this is a good reference point, by next weekend, we're going to be double what we were at the middle of March. So by the middle of June, we're going to have twice as much inventory as we did 90 days ago. So that's quite a conversation with sellers and buyers at the same time, right? So your sellers, if they're already listed, it's like, look, you're getting more and more competition each day. And we're on a seasonal basis, we're already past that peak seasonal contract writing period. So it's getting, every day we go forward, it's getting harder on a ratio for sellers. Conversely, every day going forward, your conversation with the buyers, look, inventories, you have twice as much to choose from today than you did 90 days ago, and the inventory is still going up, and you have less competition. So let's start up the search, and if they stop searching because they were dealing with this in March, start up the search again, right? Get them re-engaged, get them pre-qualified again. Because if they were searching at the end of last year, the rates are different. Maybe they need to change their price point. Maybe there's a different loan program. So re-engage your buyers based off of the inventory doubling and still going to continue higher. So your buyers have more to choose from with less competition. So, we are year over year, we have more for sale. And obviously quarter over quarter, we have a lot more for sale. So, that trend is headed higher on the homes for sale. Closed sales. So we were down 10% in closed sales year over year. So we closed just under 2,000 homes in May. Last May we closed. Go ahead.
We just going back, we did have super low inventory MLS wise, right? So is that because of that? Is that because of the rates? The hard part is, I think, is watching the trend. If it continues, yep, it's a different story, right?
Yeah, I think May. So remember, May closings, again, some of these might have been new construction. I closed one in May that was the new construction. I wrote January, and another one that was January. So some of those were at the low rates and at the low inventory. As we go over the next 6 months, that's going to start to unwind. And then we're going to see what the true demand is in the current interest rate environment and current inventory environment, right?
Correct.
And I think you had, even when the rates jumped initially, we had all those fence sitting buyers that still move forward thinking, oh, I'm still okay. I'm still going to buy before the rates go higher.
Correct.
Right. So, but I think we've kind of unloaded a lot of those.
Correct.
And now you are kind of really kind of, the buyers are a little bit more cautious, right? They
They're
want
less urgent for sure.
they're not, the urgency is not quite there. They're more cautious. They're like, well, if that one doesn't work, I have a place to live. You know, you don't have the homeless buyers right now. So, you know, I'm not saying, you know, there are still some that are, but you know, you're a lot less kind of urgency behind the buyer, which is causing this kind of uptick in inventory that usually would get absorbed. So, you know, just we got to watch this number going forward, because I mean, we're down 10%. What is it going to be once we hit the second half of the year? Because I mean, in August last year, we closed 2151. I don't see how in the world we're going to do that. So I think your closed sales are going to return. And if we go back, let's go back. And we'll just do max. And you can see the seasonality, right? We can all see the seasonality here. Let's get rid of the seasonality. And the way to do that is just rolling 12 months. So look at this trend here, right? We're sitting right around 18,000 a year. So 15, let's just do it monthly, 1,500 a month in 17, 18, 19, start of 20, you know, and then all of a sudden it exploded. And the 12 months prior to, let me see what the high was. I think it was right here. So 12 months prior to June of 2021. So June of 2020 through June of 2021, we almost closed 25,000 a year. So over 2,000 a month. But now look what's happened since, I mean, this is a year ago, right? June of 21. So we've been going down on transaction count for a year. This isn't something that happened yesterday. Right. And part of the reason we were going down on transaction count is because there was nothing for sale. Right. So we had the nothing for sale issue that was bringing our transaction count down. But now we're going through the higher interest rate, which is slowing down the transactions that are available out there. So, you know, again, it's becoming harder for sellers, easier for buyers. And that's kind of the trend and it's still hard for buyers. I'm not saying it's not. I'm not saying it's easier for buyers, it's becoming easier. So if you scroll in, let's zoom into the last 3 years. So it's interesting, these last 2 months, I think you're seeing a little bit of a steeper curve of the drop in transactions. So again, this is something to watch very closely over the next 6 months. And you know, just for a relative reference point, you know, we're going to head back down to this 18,000 number. You know, that was kind of a number that was around for years. And then where did this change is right in here, right? You know, it's all, yep. So this is a slower path down than it was up, but I think it's going to gain a little bit of momentum in here and return to that 18,000 a year. Now, 18,000 a year, it felt like back here, it felt great, right? Right. So, I mean, if we go back, it's like it felt fine, right? There was nothing wrong with selling 18,000 a year in these years. It was fine. So now we got spoiled with almost 25,000. Well, we're slowly heading back down to this 18,000. And, you know, it depends on how quick this starts to maybe steepen a little bit, but, you know, it's still a healthy environment to be a real estate agent and be a buyer and be a seller. And that's what we're going to go, you know, head into. So new listing. Yeah, we're just normalizing. I mean, this wasn't going to last forever. It's
I don't think we would make it if it did.
No. So here's new listings. So let me get rid of the 12 months. Here we go. So here's your new listings. And this is always, I always tell people, this is the one chart that you can't tell COVID, right? You can't see it. It's like, here's your seasonal curve, seasonal curve, seasonal curve, seasonal curve, you know, regular curve. Here we go on this curve. It's like, it looks the same. Every year we have the same trend. So we are in this, part of the reason why the inventory is kicking up is that we're in this trend of that higher count happening, you know, that get on the market. So spring, summer, so we can move with the kids out of school, you know, so we're in that period of time right now Now, it'll be interesting to see the next couple months. Do we surpass the normal seasonality? We might, we might keep going up here and be higher than we've traditionally been for the past 5 years. Now, we're up 11% in May, and that's part of the reason why you're seeing that inventory count go up. Up 11%, that's an extra 250 listings that we didn't have a year ago. So if we look at so we had 2306 May of 2021, we listed 2561. So that's 255 more listings this May than last May. That's why our count is jumping. Here's the pending sales. So pending sales were off 3% from a year ago. Now, part of that is simply we just didn't have as much for sale, but now we're starting to flip where we actually had less for sale a year ago than we did today. So using the low inventory excuse is starting to disappear for not having many pending transactions, for having less pending transactions. So as our year over year starts to show a negative in pending transactions, that's not reflective of low inventory. That's reflecting to some degree a lower demand. And you can see that jump in pending sales when COVID happened. And if you go back to the rolling 12 months, look at that jump here. And then here we go down, right? We're going to go back down to this 18,000 probably at some point. It's just how quick do we get there? Dollar volume. So if we look at monthly dollar volume, and when we crossed $1 billion again in May. And if you look at the rolling 12 months, here's the jump. And we're still going higher, but that's simply because the prices are higher, right? Our transaction count's going down, but the total volume is going up. And that's because if you increase your value by 22%, even if you have 10% less sales, you're still going to go up 10% in volume. So, the number of transactions and the price, they're kind of fighting each other right now. You got a higher price, lower transaction count, but the net is we're still producing, 12 billion in sales over a rolling 12 months. Again, the higher price points, it's not like that's, we're not going from 425 back to 300, right? So this, I do not expect to return to this level. I think it's going to settle down, but we're at a higher price point to stay in Charleston if you want to live here and buy a house. So this will not look like the other ones with any significant drop to this. It will slow down and maybe go down a little bit, but we're not going to go back to 6 billion in sales because the price points have jumped so much that's just not going to happen. But, and again, I want to put a reference on months of supply, right? This is always, if people can only tell me one number, it's like, tell me months of supply, I'll tell you how your market's doing. And again, to get rid of the seasonality, I'm doing 12 months here. So we've been sitting at 1 month for the past few. So over the past 12 months, it's 1 month of inventory. But look where we were, 4 months. And I know people say 6 months is a neutral market. I think it's less than that. That's just my personal opinion. Like I felt like 17, 18, 19 was a fairly neutral market. I think it's 6 or below, right? I'm not going to say the average is 6, maybe 5 is the average. Give it a range, right? It's not exactly 6 months. Let's say between 4 and 6 months of inventory is a neutral market. If you get to up to 7, 8, 9 months of inventory, I think you're at risk of prices coming down, right? And this is where, let me go back even further. I just want to put a relative reference. Again, we were at 3 months of inventory in 2005. And back then, when I was in this business, everybody's like, this market is unbelievable, right? This was, right? Like this was just a phenomenal market. And then all of a sudden, the recession happened and we were at 16 months inventory. And there were different words spoken that I won't speak on this, but that was a different market. So we went from 3 months to 16 months. So when you go up, so watch what happens. When you cross that 6, 7, 8 months, what started to happen here? Prices started going down.
Drastically.
Right? Prices started going down, down, down. And then once you crested coming back the other way, kind of once you started coming down, prices recovered, kind of went sideways for a little bit. But then once you crossed here, prices started going up again. And the jump in prices happens when you have 1 month of inventory. So for perspective, the past 12 months has been 3 times faster than pre-recession. But what is it going to take for us to get back to 4 months where we were at for years in here? So if we go back to 4 months of inventory, you know, from a standpoint of to get back to 4 months, let's just do some numbers here. So 4 months, if we have, where's my closed sales? So closed sales, right? So let's just make some predictions. So if we go back to 18,000 a year, that's 1,500 a month. So let's say ultimately in the next couple of years, we go back to 1,500 a month for closings. Then to get 4 months of inventory, you have to go back to 6,000 for sale, right? So if we return back to a normal market, 6,000 for sale, selling 1,500 a month would be 4 months of inventory. That is not a buyer's market. It's maybe a slight seller's market. Prices are still going to go up. And if, to get back to here, so how do we get back to there? We're at 1,750 for sale. How long is it going to take us to get back to 6,000? It's not this year, right? It may not be next year, right?
I've been
So-
seeing it creep up approximately maybe by like 100, close to 100-ish active homes a month.
Yep,
I
and
don't know
well,
if that's what y'all been seeing.
well, we jumped. This May was a huge jump, and maybe you joined us a minute late, but we started the month at like 1,300 for sale, and we have 1,750. So we've been jumping 100 a week in May. So we've gained some momentum. I think part of that is that spring rush of listing your house, before the summer. I don't think it's going to go 100 a week the rest of the year. But if we go 50 a week, where are we at the end of the year? We're still below 6,000. So if we take the last 6 months and we go 50 a week, I mean, maybe we're at, between 2,500 and 3,000 for sale. That's still half the inventory what we need. And from a closed sales standpoint, we're not going to drop. Let me zoom in a little bit. We're not going to drop from selling almost 2,000 a month to 1,500 a month between now and the end of the year, right? It would have to be a pretty steep drop to get down there. Let me get rid of them. So getting rid of the seasonality, to go back down to where you're averaging 1,500, I mean, maybe next year we're getting closer to that, but we're still in this, seller's market for a while, but your buyers and sellers really need to start looking at comps again and evaluating where the market is at. And you can see it. I mean, I'm sure everybody in this call, in your neighborhoods that you do business, you watch houses come on the market and look at those price changes, right? They're pricing it too high and they're changing the prices, and they're changing the prices a lot of times relatively quickly. And Jan was asking what were the interest rates in 17, 18, and 19. Well, remember at the end of 18, rates jumped to 5% at the end of 18 for a short period of time. But you're right, John, that's like most of the rates were around 4, right, in that ballpark. So we're higher than we've been in years on rates. And that is going to be kind of the nemesis of the prices jumping like they have been at some point. And keep in mind, when you read these articles and it's like, well, it's 22%. Well, we're also started from the lowest. I mean, this is a reflection of having our all-time low on inventory since I've been in the business. These are really kind of when we were at that 900 and something for sale was driving those prices higher. But look, when you run that hot sheet, look at how many are price changes, and and also start to look at the closings. Remember, some of the closings still happening. It's like, wow, that closed 100,000 over list, but look when the contract was written, and watch what happens. Some people are going to start to negotiate, and all these numbers the next 6 months are going to change, and also from the first half of the year. And I know we talked about this on the last call, but I want to reiterate this, is that part of what we're going to experience over the next 6 months is The second half of the year is never quite like the first half on appreciation. It doesn't really matter what year you're dealing with. So when you look at 17, so we started the year at 240, let's say, and then by June, we're at 260, right? So here's a path from 5 years ago. So 240 to 260. But then look what happened the rest of the year. You know, you go back to January, where were we? We're actually below June. So the first 6 months of the year, you had all the appreciation. The next 6 months, you kind of went sideways, right? So let's look at here. So we start the year at 258. By May, we're at 274. And then if you go, basically, now we're back down to 266. Right? So overall, the net year was plus, but it all happens front loaded. So 266 in January. By June, we're 289. Towards the end of the year, we're back down below 289. Right? So it is such a 6 month front loaded appreciation of the trend. And this is, again, this has nothing to do with COVID, right? We're looking pre-COVID. And this trend has always been here. And you have that seasonality, which is a little bit different for median price, and you have a long-term market trend. What's happened the last couple of years was this long-term market trend of, wow, there's such a low supply and high demand was driving the prices higher. But we're about to hit that second half of the year window. So this jump of 25,000 in a month in median price is not going to continue, right? This second half of the year is going to really start to flatten out on price because it does every year. And we are going to return to this normal seasonality. So, you know, your sellers need to recognize that, you know, with a higher inventory and less demand, with higher rates, with the second half of our seasonality, things are changing for your sellers. And again, it's still a very healthy seller's market. Don't get me wrong, but don't outprice the market either. And from your buyer aspect is that, you know, take advantage of having a conversation with them about some of these stats. Like next weekend, like we're going to have double the inventory we did 90 days ago. Right. And again, 1700 or double would be 1856. Right. Our lowest number I saw was 928. So double is 1856. And John and I talked about this. I think it's going to happen next weekend. Right. So before next weekend, we're going to be double. So in a 90-day window, buyers have twice as many choices as they did, plus less demand for those same choices. Right. So even though the interest rates are higher, those are starting to work in their favor. The supply and demand is starting to, I'm not saying it's a buyer's market, but it's starting to lean more that direction.
Not yet. Maybe we will. I don't think it's a bet. I think we both agree. That's the hard part.
I don't think we can bet on that one because we both think by next weekend it'll be double.
I mean,
But I mean,
by tomorrow.
that's a right. I mean, the way things are going, maybe it'll be this weekend. But I mean, the inventory is jumping, and part of it is that seasonality. But we also need to, you know, watch it, and that's why it's so important that I feel like just writing these numbers up on the calendar makes me seem smart because I can tell you exactly where we were a week ago. You know, and there's, if you start writing the numbers on the calendar, there's trends even weekly. You know,
It's crazy.
Tuesdays are always the low. Saturday at some point is always the high, and it can vary 150 within the week. So you have to look at the count. Don't compare Tuesday to a Saturday. It doesn't work. You got to compare Tuesdays to Tuesdays working back and Saturdays to Saturdays working back, because there's even trends within the week.
I think there's a lot of agents that aren't also realizing that what you said earlier, there are double the amount of homes from like 90 days ago. Based on like, if you have a listing, you probably can notice it in your activity and most likely in your offers, because it's just fascinating to watch some agents still throw the first offers way over ask or something.
Yep. So here's the like.
That'll slow down.
talking about activity. So again, this is through showing time. So it's not every single listing in MLS, but we were getting 13 showings to pending in February, and we're down to 10. Now, 10 wasn't abnormal. Like if you look at 17, 18, it's about, but that's a pretty big rise and a pretty big drop all at the same time. Now, what that's reflecting is, you know, I mean, I've had houses that I had 30 showings the first day, right? But that's not, that is disappearing. That trend is disappearing. And maybe you get a good offer, but you don't have 5 good offers, right? And at some point you slip over that curve where it's like, okay, I used to get 5 offers, then I got 3, then I got 1 good one. And now it's like, okay, now I'm looking for one, right? Now I'm trying to find one. And at some point you don't really feel it because like, oh, look, I got a over full price offer. It was the only one, but it's over full price. Let's sign it and go. And then all of a sudden the next listing you have is like, ooh, I didn't get anything, right? And it's like, it's funny as an agent to say, oh, I didn't get anything this weekend. You know, what a failure. It's like, well, that's not how real estate typically works. So, you know, you just got to watch that. We're going to cross over that point. And again, some areas have probably already crossed over where it's like, you have to price your house based off the comps. Some are still crazy, but some are priced, you know, have already changed that market. Look at the showings per listing. So in February, we had 11.3. Last month, we had 7.7. Next month, are we half of what we were in February? I would say probably so, right? We might be at 5 or 6 right in here, which is not, again, look where we were, right? It's historically, it's not bad, but to get 11 showings, you know, per listing on average, you know, you have some that have 40 and some that have 1, but you know, showings per listing, what this is a reflection of, it's 2 things, right? So showings per listing is a reflection of a lot more for sale, right? Almost double, plus less people looking, right? So this to here is what we, you know, this number here is definitely a reflection of what's happening in the market. It's like, okay, more to choose from and less buyers competition. Here it is right here. Right, this is what has happened. And again, this trend, all of a sudden, it's not going to bump back up. This is a seasonal trend too, right? You can see the seasonality in it. Well, we're on the tail end of the seasonality, right? Look what happened after April. It went down pretty much the rest of the year to the low in December. We're going to like bottom out at some point, but this is a seasonal trend too. And this trend, I mean, think about it. This is May. We have more for sale now. So, you know, buyers, if they have choices, you know, and again, some of the buyers, they definitely backtrack on when rates jumped. What do? They just kind of like, I mean, John, we were talking about this, like, you send them a great listing and you don't even hear from them, right? It's because the rates went from 3% to 5%. And now they're like, oh,
Uber choosy.
yeah, and I lost 5 houses, rates jumped, I just give up. Right? So you need to go back and re-engage your buyers based off the fact of, and even if they can't buy something today, the market is changing in their favor that they might be able to not be one of 10 offers. You know, those VA buyers that have to borrow 100% and get approved, they have a chance, right? At some point, they're going to have a chance again and not get beat out by cash or 20% down. So don't let them give up hope on finding the right house because they keep it getting beat out by multiple offers. It's going to change, and you can see that trend.
I think the same thing should be said to your selling pipeline that are waiting for the peak. Like, you might have missed it, so
Yep.
sooner than later.
Yep. Well, and again, I closed one in, and I know Virginia's closed a bunch out there, but I just closed one in Carolina Park, and now I look at all their neighbors and, you know, they just went too high. You know, they went pretty significantly above our price for the same house, right? It's basically the same house. And they went significantly above, and they've all backtracked down to the price we sold, right? But they might have to negotiate off of that. So here we are 2 or 3 months later, they might actually get less than what we got And it's because, we just happen to hit the timing right on the market. They overshot the market and they're kind of backtracking to where the market is. The market's happy at a certain price point. But if you price it too high, you just, and again, this applies in normal markets. It's like if you overprice and you're competing in a different price point, there's always a better house than yours and you will always lose. And we will get back there at some point. I did find a couple of interesting, just looking around the different areas. I thought this one was a very interesting one. So I'm going to go, so again, we're entire MLS. So watch this. If I go, I'm just going to put in, I think what did I do? Area. So here's, you'll love this. So here's Daniel Island. Look at the median days on market on Daniel Island. What is that number? It's 0.
Crazy.
0 days on the market as a median. So what does that mean? To me, what that means is half the houses are selling before they're hitting MLS, and the agents are putting them as active contingent basically the first day, right? Because I mean, how many houses realistically are listed in the morning, you negotiate to a ratification, and you put an MLS the same day, right? Maybe, I mean, I think I did that once during this whole craziness, but it usually takes at least a day, right? So what's happening on Daniel Island is half the houses are selling before they're even hitting an MLS.
And look back at the 18 that the days on market.
I mean, look at that. We had 127.
It was a freaking buyer's market out there.
Yeah.
4 years ago.
I mean, we'll go back in time and there's not a, look at 222 days in the market.
Like, would you want to take $1 million listing back then? You're probably like, eh.
No, it's not that exciting. And even if we get rid of the spiky, let me look at the, so I mean, look, we were 100, this is 12-month period, right? This isn't just an anomaly month. So 12-month period, it took basically half a year to sell your house. On, as a median, right? Some of them were taking a year.
Yeah, that's not the average, yeah.
Right. And then like in the heat of the market, we were at 13, we're at 0 now.
That's also like when
Well,
John
3
Mill was
for
building
12
them
months.
for like 350, 400, and then the prices jumped.
Yeah.
But it is crazy.
But yeah, I thought that was a phenomenal stat. It's like it's 0 on Daniel Island.
I don't think I've ever seen that one.
I just ran across it the other day and I thought I'd have to share something like that. And again, if you look at, since there's not a ton of sales on Daniel Island, you have to be careful because the price didn't go from 145 in July to 650 in January. That probably means a ton of condos sold in January 2022 and a couple waterfronts sold in here. So you really, if you have a data area that you're not taking a lot of data, you really kind of got to normalize it by taking 12 months and saying, hey, show me the bigger trend. It's still phenomenal because if you look at the beginning of 2020, we're 703 on Daniel Island, and today we're at 115. So I'm just getting out my calculator here because this is something else I was looking at. So Daniel Island median price went up 64% since January 2020, 64% as a median price. And that's a 12-month rolling average. So I'm getting rid of kind of this gyration that you see over there of all this craziness. But you can see it's kind of like the stock market, right? Look at how volatile this has been the last year and a half. It's all over the place. Whereas normally it jumps a little bit because you don't have a lot of data, but look how crazy this has been. If we go, let me do city. I'll just do all of Mount Pleasant.
It probably mirrors the stock market most closely, given that
Yeah.
same type of money.
Correct. Yep. So here's Mount Pleasant. So we're up 20%. So the Charleston market was 22%. Mount Pleasant year over year is 20%. Now, again, let's do the same exercise. So we were 462 to 701. So Mount Pleasant in that same period of time went up 52%. So, Daniel Island was 64%, Mount Pleasant's 52%. Let's do if we do all of Charleston, same thing. So 287. 287.
It's about 50.
So 48%. So again, 50% is, that's what Charleston has done since January 2020. So, if you look at the houses and people look, well, they just bought it in 19 at this, and now they're asking that. It's like, yeah, that's pretty much what happened. And again, don't hold your breath on, all of a sudden prices dropping back down, because we still have an imbalance, right? Everything's going to depend on supply and demand. And again, the months of supply for prices to come down, we have to be probably well over 6 months of inventory. I'd probably even say 8 to 10 months of inventory before you're going to have a situation where price can come down. Now, I'm not sitting here and saying that I can't pick out houses that went under contract in March of this year that I think somebody might have overpaid for. But as a whole, the market median price is not going to come down unless the months of inventory goes up high enough where you create a true buyer's market. And we're just trying to get back to neutral. So, all in all, these conversations right now, with this shift in the market, right, we're shifting back the other way. It's very important to have with your potential sellers and your buyers and your current buyers, and making sure everybody understands that, you can still sell right now. You just need to be careful where you're pricing your house, and you can still buy, and it's going to become easier. And I'm going to have some conversation with my buyers, because it doesn't matter what market it is, it's always easier to buy in the second half of the year than the first half. So if they haven't bought already, it's like, okay, well, get yourself together and let's make it happen in the second half of the year, because we're going to have more for sale and less competition. And we'll see what interest rates do, but they've kind of seemed to have I'm going to say leveled out, but like they're kind of going sideways, right? They jumped. I'm not saying they didn't jump, but they jumped, and now they seem to be kind of going sideways. And I think part of it is, the whole economy is kind of, with inflation and everything, it's a little squirrely right now. So I think they're trying to, the government's going to do everything possible to not make, mortgage rates go to 6 or 7%, because the GDP of housing transactions is a big part of the economy, right? So it's also an election year, right? So, they're not going to want to, kind of rock the boat more than it already has on real estate. But that's kind of, I think it's good conversation to pick out some of this, information to have with your current buyers and sellers, like right now, and kind of get them moving forward one way or another. But anybody have any general questions? I was just checking the chat to see if I missed anything, but so again, when I know John and I do this, but when the first of the month pops up, because this only updates once a month, right? So after you look at it, the first week of the month, it's not going to change. This is all monthly data here. So, we'll do this the first of next month, and it's going to be very interesting to see kind of what these trends are doing, because I think this is going to set, we're starting to reach that point of closings where these closings are happening, where the rates really jumped.
Unknown caller.
Inventory has bottomed out. So, I think going forward, you're going to start to see some of these numbers this is crazy how much this price has jumped this year. But again, that was all driven by that hyper low moment in time of inventory. So I think this is all going to slow down. We can't keep this pace up. We were at 315 last January, we're at 425 today. Right, so that has to slow down. And again, if I zoom in, this May, I think that's a huge reflection of how low the inventory was in March. So don't be surprised if we backtrack a little bit from this period of time here. Look at that, January. So think about that for a second. January to May was 361 to 425. Is that normal? No. So I'm just doing some math here. So 361, that's 18% in the first 5 months, right? That's not normal. So don't be surprised if we kind of backtrack a little bit from there at some point and level, kind of level out. And don't think that prices are coming down. I think just there was a overheated moment of about 90 days that was happening. And kind of reality is going to set in that, like, okay, well, maybe that 22% was maybe a little strong. So, maybe we'll kind of settle down around 400. And, again, from 1980, house prices have gone up 4.6% a year. So, housing over the long term is going to go up in value. It just can't go up at 22%. So we're going to return to that level at some point. I love you too, Laura. You're always my favorite, one of my favorites. So I'm always happy to kind of share my thoughts and
Hey, Anton,
Sorry, say that again. You're breaking up.
Anton, I'm not sure if you can hear me. I have a question. This is Lauren.
Sure.
Yeah, my connection's really bad. I'm not sure if you'll be the number of price reductions and to just know like what percent are reducing the price.
Yeah, I mean, I wish there was a better way. I mean, John or Trenton or you guys, anybody, Laura, do you know how to follow that?
I don't think there's like a button for it or a search bar. I mean, I think it's just as you look at the hot sheet. And it depends on what you're watching too.
Yeah, I've thought about, especially with the market shifting, I've thought about going back and looking at like 30-day windows and running hot sheets for 30 days windows and just counting how many.
That's the only way to do it, is to run those increments. I've done it before.
Yeah.
I can't find any other way.
If you guys get me inside a market monitor and I can help them out, I probably could create a lot of cool stuff for us. I've tried that once already with APC. So. But yeah, like watch and again, it's that's why like the calendar up on the wall and things like that. It's like, it's the old saying. It's like you put a frog in a pot of water and you turn it on. It takes a while to figure out that it's hot. But like if you're watching it every day, you're in the middle of it and you can see when the temperature changes, and it has like it's not changed to the point that I'm like nervous about this bubble or anything. There's no bubble, right? We're still, I mean, how easy is it to get a loan? It's not, right? That was a big difference from back in 2005. I mean, I could just call my bank and say, here's my social security number. This is how much I need. And here's my closing attorney. And it was ridiculously easy. And I'd rather it stay the way it is. And it's a hard process to get a loan. So that is probably the biggest difference of why, I don't foresee any bubble or issue, is because the lending is still so tight and the demand is still high and the supply is still low. It's just, we got to watch these numbers, because I mean, homes for sale, I still, to this day, it's like, again, lessons learned. I wish I had a calendar on my wall back here, right? That would have been pretty cool. Right. So, because that was such a dramatic change, and just watch this trend. I mean, you can see this bottom happening right here. Now, we bottomed out last May and we went up through September and then we went right back down. Right. But I think this is different. I think we've kind of, we've really literally bottomed out, and, we're going to start that trek higher. But, it took us a couple years to get down to where we're at. It's going to take a couple years to get back up. Now that the
accelerated down thing was the COVID. Like everybody was freaked out. Like, who wants to have people walking through your home back in the start of 2020? So that's where we really started feeling it. Yeah, I think 12 months of data, a year of living with it. Like now, everybody feels a little bit more normal.
One, and I think a big part of it is the supply chain issues. If builders can get things back in order, if supply chain problems get solved, if labor issues get solved, then if they start building more houses, then you're going to increase that inventory. They seem to be, still struggling a little bit with supply chain issues. So, but once that is solved, that's going to change that inventory hitting the market, and we're going to return to this normal. I mean, look at that 6,000, that started in 2013, right?
That was a great year, or it felt like a great year for me.
It was a great year. So 13 through 20, we were like almost indiscernible from every year of inventory. And then this happened, and then we're going to return, but it's okay to have 6,000 listings.
We also
Right.
need to consider though, is 6,000 a balance with that many more people here now?
Correct. I mean,
Plus,
keep in
yeah.
mind how many people we have living here compared to back here. So we hit 928, right? So we had a quarter of the inventory we did with 50% more people living here. So that's why the prices jumped way more than it even did pre-recession. I mean, everybody thought the price increases back here were crazy. It's like, well, they didn't experience this.
Hmm.
So, you know, again, I appreciate everybody joining me on the call once a month because this keeps me in order too. It's like, it's so important to watch this trend and how fast the trend is going to happen. You know, because May was kind of an eye opener for me of how we've been changing, I mean, 100 to 150 a week on inventory. And how long does that trend happen and how quick are we going to go up? At the same time, you know, does the buyer contract count slow down? So, you know,
Anton,
yes.
are the numbers the same or similar for new construction versus previously owned?
So if we do, so here's new construction. So you can see, you know, from 352 in March to 496 in May. So yeah, I mean, a similar increase from, you know, we had 1,500 for sale. So out of the 6,000, about 25% were new, right? You know, just for a ballpark, we were about 6,000 and around 1,500 were new. Right now we have 496. So, I mean, that's a little bit bigger percentage, right? That's closer to 30% of where we, you know, slightly more.
How about April, May compared to April? So we've got 352.
352, 382, 496. So look at that new construction trend, you know, we're on that upward tick. That's also reflecting on the total count, right? So we went down, back up, back down. So it mirrors the total count, but more at a 25% level. But if they get
The same for previously owned. That's what I'm asking, wondering.
yeah, it's a very similar trend. But let's see when we get back up to 1,500 new homes for sale. So, I mean, at some point it will happen. So, you know, again, first of every month, I feel free to play around with this in the areas that you do business. And, you know, you're going to see stuff like 0 days on the market on Daniel Island that you wouldn't expect to see. So, well, I hope everybody has a great weekend. And good to see some faces.
Thanks,
Thank you,
man.
Anton. Have a
So-
good weekend yourself.
All right.
Thank you
Take
very
care.
much.
Yep. Bye.